Good afternoon, everyone. I can see we're starting to have some attendees come in now. I'll just give it a minute, wait for everyone to join the webinar, and we'll get started. Thank you so much to all of you for listening in on what is for most of you, I'm sure, your lunch break. And for anyone that can't be with us for the entire time today, we will be posting the recording of this webinar on our YouTube channel as well, so that you can watch it back later or pause at a certain point if you want more information too. As everyone is coming into the webinar, I might just go through some housekeeping. We haven't done one of our webinars in a while. So for those of you that have joined a webinar before, welcome back. It's nice to be back. And for those of you that are new to our superhero webinars, the way that this works is we've got two main ways that you can interact with us throughout the webinar today. So the first is in the chat, which you should be able to see at the bottom of your screen. The chat is for any general comments, or if you'd like to say hello, let us know where you're joining in from. We love to see where everyone's from. So feel free to jump in now and let us know where you're joining us from today. And then we've got the Q&A function. So throughout the webinar today, if you do have any specific questions, we will have time for live Q&A at the end. So please use that specific Q&A function, because that way we'll be able to see your questions and we won't miss them in the chat. And for any questions that we don't get to today, we'll make sure we get back to you from our support team over email. So yeah, feel free to use the Q&A throughout and we'll get to those specific questions at the end. But otherwise, it looks like we're a couple of minutes in now, so let's get into the content. Just give me a moment while I share the presentation for today. Alrighty. So, not sure how many of you know a lot of information about Superhero Super, but today we're going to talk about Superhero Super, a bit more about the product and what we offer, and also about specifically the new growth and high growth investment options that we've launched onto the platform in the last few months. So it's a chance for you to understand a little bit more about how our superannuation offering works and also what the different investment options are for you. And just a reminder before we get started that Superhero does not provide financial advice that considers your personal objectives, financial situation, or particular needs, and all investments carry risks. So please consider carefully the product disclosure statement, additional information guide, in addition to our target market determination available at superhero.com.au before making a decision to acquire, hold, or continue to hold an interest in Superhero Super. And past performance is not indicative of future performance, and any graphics, charts, and graphs provided are for illustrative purposes only today. So thank you for listening through that one and on to our content. So today we'll go through what is Superhero Super. We'll then go into the investment options, and I'll show you how to join or how to switch if you're interested in that as well. So Superhero Super is a retail superannuation fund that allows you to have more control over where your super is invested. So what does that mean? Superhero Super is not a self-managed super fund, so there's no need to go and set up a self-managed super fund, but you do have the option to invest in direct shares and ETFs with Superhero Super, which is a little bit different to your kind of typical pre-mixed kind of balanced superannuation option. And I'll go through today how we actually structure that. So the benefits of Superhero Super: you can invest in ASX 300 shares and ETFs without a self-managed super fund. You get the advantage of some of our key trading features like live market pricing and advanced order types, both in trading and in super, because we've got the two different account types. So you get those features in both. Advanced order types are things like limit orders as well as market orders, recurring orders, and stop loss orders for investments as well. So that's all available in the super product. And you get transparency on where your super is invested. So not only do you get to choose your investments, you then know exactly where your superannuation is invested as well. And we've got two different account types. So essentially, if we look at the hierarchy of how these accounts are, you first choose your account types. You've got autopilot and control. And the key difference between these account types is the percentage of your super balance that you're able to directly invest yourself. So for autopilot, there's a minimum of 70% that's invested in one of our managed investment options, and we'll go through those today. So the options there are the balanced option, the growth option, or the high growth option. So you select one of those, and that's where 70% of your balance sits, or minimum of 70%. And then with the other 30%, you get to select between a range of ETFs, and we'll go through what those ETFs are today. So the autopilot option is for those that want that small amount of control, but don't want to be directly investing in shares and ETFs. And the autopilot option 2, your contributions are automatically invested each month. So you don't need to come in and actually make direct share investments each time you get a contribution. Now, control is where you actually invest your money into direct shares and ETFs. So in the control option, there's a minimum of 25% of your balance that still needs to be in one of those managed investment options. So that's the balanced, the growth, or the high growth. But then with up to 75% of your superannuation balance, you can actually go and I won't say trade, but trade or invest that cash or that balance into direct shares and ETFs. So that's ASX 300 shares and a range of ETFs. We'll go through a few of those options today, but there's a full list on our website at superhero.com.au/support. If you actually go in there, there's an available product list that actually gives you the entire list of all of the investment options available with the super control option. So with the control option, you invest those contributions yourself. The managed investment option, that'll be automated. So 25% or 30% will happen every time into that option. And then you'll get the rest as cash in your Superhero Super account. So it'll look very similar to, if you've got a trading account with Superhero, it'll look very similar to having cash available in your wallet to invest. And then you can go and make those direct share investments as you would with our trading product. So if you're familiar with how trading works with the Superhero trading account, it looks quite similar in the Superhero Super account. All right. So we spoke about having a percentage of your balance in one of the managed investment options. And this is where the most recent change has been in our product. So previously, everyone had the balanced option as that managed investment option. And recently, we've launched the option for growth and high growth as that managed investment option as well. So we're going to go through a little bit about what is the underlying investments behind those options. So like I said, recently we only had the global balanced index portfolio option, and now you've actually got 3 options, which all have different underlying investments. So you can see there for the balanced index portfolio, you've got the Vanguard Diversified Balanced Index ETF. For the global growth index portfolio, it's the Vanguard Diversified Growth Index ETF. And for the global high growth index portfolio, you've got the Vanguard Diversified High Growth Index ETFs. So that's essentially the underlying investment of that portfolio. So let's go through, if we've got the managed investment option, which has an underlying investment, what we're looking at now is what is actually made up. What is that investment option made up of? So where is that money actually invested? And essentially the way that these funds are made up is you've got the index ETF, which then actually is made up of a range of other different ETFs in different percentages. And so that's essentially to get to a different allocation of growth asset classes versus defensive asset classes. So to use the global high growth index option as a first example, this ETF targets a 10% allocation to income asset classes or more defensive asset classes, and a 90% allocation to growth asset classes. So it suits investors seeking long-term capital growth and with a higher tolerance for the risks associated with share market volatility. So you can see there the different performance numbers for this fund. And on the right, you can see that this index ETF invests in a range of other funds at different percentages. So because this is high growth, we've got quite a large allocation to Australian shares and international shares. So you can see there on the right, that's about 36 and 26. So about 60% or just over is actually invested in and actually another 16. So really, 80% or more of this fund is invested in shares, in shares, which you'll see in a few slides is quite different to the allocation in the balance fund, for example. And what you can see is, as you start to go down, we've got the bond index fund and the fixed interest index fund, which are more of the income asset classes. They're still in this ETF, but at a lower percentage. So you're really looking at the mix of different funds that are in this ETF and how that overall gives you a high growth or a growth allocation. So I hope that's making sense to everyone. Let me know if that's not clear, and we can go through it in a little bit more detail. But you can see here that this high growth option has a really high allocation to shares. So it's suiting investors that have a bit of a tolerance for risk over the long term. And what you might see is that people that are a bit younger might have a higher allocation to growth asset classes because they've got longer before they need to actually access that super. Alrighty, now onto the growth index portfolio. So this portfolio targets a 30% allocation to income asset classes and a 70% allocation to growth asset classes. So again, more growth than income, but a little bit more balanced than the high growth option. So this one suits investors seeking a long-term capital growth, but requiring some diversification benefits of fixed income to reduce volatility. So again, when we look at the performance numbers, we see that in the 1 year and in the 5 year, this one hasn't performed as well as high growth. We've had a couple of years, the last year's been a bit volatile, but over the last couple of years, we have seen quite a lot of growth in share markets. So you can see there that the high growth has slightly outperformed the growth in the past. Not saying that's coming in the future. Past performance is not indicative, but just an example of the difference in performance there. Now, when we look over on the right at the different allocations to funds, you can see that this is quite a similar structure in terms of which funds are included in this ETF, but they're at a different percentage. So I guess the key difference here, if you look at the bond index fund, this was a lot smaller in the high growth option, and it's a lot higher there in the growth option. So a higher allocation to that fixed interest asset class, which is bonds. And as you can see, as you go down, the fixed interest component is also a bit higher than in the high growth option. So lower allocation to shares, higher allocation to bonds, which reduces a bit of the volatility, but reduces also the percentage allocated to growth asset classes. So it really depends on what your goals are, and also what your life stage is in terms of when you're looking to access your super and whether you're looking to preserve capital or grow capital. And we've got the balanced index portfolio. So this one, again, very similar structure to the other two, which really helps you to be able to compare between the three as well. And I'll show you how you go about switching in our platform in a moment, but we'll actually show you these different numbers as well and these different percentages. So you could actually go and compare the three side by side. So this ETF targets a 50% allocation to income and a 50% allocation to growth. So truly balanced there, and it suits investors with a medium-term investment timeframe seeking a balance between income and capital growth potential. So you can see there, performance is a little bit different to the other two as well. And on the right, we really see a higher allocation to bonds and to fixed interest. So they're in the top three, both of those. Whereas, high growth was all shares in the top three. Growth, you only had bonds in the top three, and then you've actually got bonds being the highest allocation in the balanced index fund. So again, you can really see the difference in what these are targeting in terms of their returns. Now, I thought it would be useful. Oh, I'll just go back. Sorry about that. We saw on the right that there's all of these different funds, right? You've got the Australian Shares Fund, the International Shares Fund, the Emerging Markets Fund, and that's great. We get an idea of what they are, but we don't actually know from looking at this what companies these funds are actually investing in. So it can be kind of hard to know unless you do some more research what companies you're actually getting the returns from. So I thought, let's have a look at what they are. When it comes to the Australian Shares Fund, which was in all of those options at different percentages, here is what the top 10 holdings of that fund are. So you've got BHP, Commonwealth Bank of Australia, CSL, NAB, Westpac, ANZ, Woodside Energy, Macquarie, Wesfarmers, and Telstra. So all big brands that we know. You've got a high allocation there to our banks, which are some of the largest listed companies in Australia, as well as mining and oil, pharmaceuticals, and telecommunications. So quite a broad range, but definitely a lot of banks in there. And it pretty much represents the largest 10 companies on the Australian Stock Exchange by market cap. So I guess you're really buying into the overall Australian listed market there with that fund. When it comes to the International Shares Index Fund, it's a very similar story. The top 10 holdings pretty much follow the top companies by market cap in the US. So you'll really see here the difference between the Australian and the US market in terms of the types of companies that are really the biggest. So with Australia, it's banks, it's mining companies, it's telecommunications companies. And in the US, there's a lot of tech in there. So you can see Apple, Microsoft, Amazon, Alphabet, which is Google, NVIDIA, ExxonMobil, United Health, Tesla, and Johnson & Johnson. So when you're looking at the funds, if you see the International Shares Fund being higher, you're probably getting a higher allocation to tech because that is what is represented as the largest companies on the US market. So yeah, good to know how not only the countries are affected or you're investing in different country markets, but also in different sectors, depending on what country that market is targeting. And the Vanguard International Small Companies Index Fund, this one was a smaller allocation than all of the above. And when this is posted on YouTube, you can go back and have a look at the percentage for international small companies. But this fund invests in a range of different companies across multiple markets that are a little bit smaller. So there are a few that you might not know about. You can go and have a look at what these do, but you've got Reliance Steel, some more down there, Tapestry Inc. So really, companies that you might not find by yourself, you actually might have super invested in these. So it's always good to know and to do a little bit of research. Might be a small percentage, but good to know. And the last one, just thought we'd have a look at the Emerging Market Shares Index Fund. So this one is companies that are based in emerging markets. So that's companies like, you can see there, Taiwan, China with Alibaba. You've got JD.com as well, which is from Asia. And you also might have countries like Brazil and some countries in South America too. So Asian markets, South American markets, they have seen quite a lot of economic growth in the past couple of years. And so, yeah, a bit of a different allocation there to your typical Australia or US markets. Alrighty, so we've gone through what the managed investment options are, which are either 70% of your balance if you're in the autopilot investment option, or they're minimum 25% if you're in the control option. So where does the rest of your money go? With autopilot, you can invest up to 30% of your super in different themes. So we've got 6 different themes available, and you can invest up to 10% of your balance in any one of these, up to a total of 30%. So you can see on the right there how you can kind of use the sliders to select which ETFs or which themes you'd like to invest in with that 30%. And these are quite popular ETFs. They're quite popular in our trading platform, especially a couple of the ones up there. So US Tech, which is the BetaShares NASDAQ 100 ETF. We've got Asia Tech Giants, Global Healthcare, Climate Leaders, Gold, and High Interest Cash. So depending on what your interests are or your goals are, you can allocate a percentage to one or multiple of these ETFs. And with control, it's a little bit different. So you can see on the right, you've got a very similar screen to what our trading platform looks like, and you can invest up to 75% of your balance into direct shares and ETFs. So you'll receive, like I said before, your contributions, you'll receive up to 75% of your contributions as kind of money available to invest in your wallet. And then you can come to the Super Invest tab. You can see up on the right, it's my Super account. I come to the Invest tab and I can actually make an investment. And you'll only see in the Super account option, you'll only see the investment options you're actually able to invest in. So that's shares in the ASX 300 index and selected ASX listed ETFs or exchange traded funds. So that includes all of the options that are in autopilot, and you just get the larger investment menu of shares and a range of other ETFs as well. So examples of companies might be Macquarie Group, it might be Coles, it could be realestate.com.au, or it could be Xero. So lots of different companies there. If you look up, the ASX 300, or if you sign up for a Super account and toggle to your Super account, you'll be able to see the full list there. Thought it would be worthwhile just mentioning ethical investing. Now, this has been quite a touchy subject, and for good reason at the moment. The most important thing I'll say here is do your research, understand what your own values and goals are and what ethical means to you. We don't define for you what that means. There are a range of different products available in our superannuation product that are named as ethical or climate leaders or ethically conscious. Now, just a note here that these are not all the same products. So what the most important thing to do is actually to go on, if it's an ETF, actually go on to the ETF issuer's website, and they'll have a full breakdown of what that company holds, what they exclude, so what categories they exclude, at what percentages. An example might be an ETF that looks specifically for renewable energy sources, as opposed to an ETF that might just exclude gambling and weapons. So there's different definitions of that. Make sure you go to the ETF provider's website or the company's website and actually understand what ethical means to them, or what ESG means to them, and how that aligns or doesn't align with your own investment goals. All right. I think this might be the last one, and then we'll see if there's any questions. But how do we join Superhero Super? So the first step is actually to sign up for a Superhero account. So I would assume that most of you already have a Superhero account, but if you don't, go and sign up for a Superhero account. It only takes a few minutes. It's pretty simple. And then once you've got a Superhero account, you can actually add a Super account really easily. So if you toggle, you might see it in the top section where you can see your account. You can toggle down and add, or it's in your profile as well. There's a button. If you go to profile, down on the right, there's a button that says add an account. So you just click on that add an account button and you'll see Superhero Super as an option. And then how it works to sign up for an account is you'll first put in your tax file number. Now, what that does is it will actually show you which funds you currently have Super with. And you can choose to either roll over all of them. If you've got multiple, you can roll over the one that you have. You can do a partial rollover. So we give you all of those options. But it's called Super Match, and essentially it just shows you where your super currently is, and then you can choose to roll over if you like. You then go in and you choose an account type, whether that's autopilot, which is a little bit more automated for you, or whether you want to invest directly in shares and ETFs with the control option. You select your account type and the percentage of your investments that you want into themes if you're an autopilot, or the percentage you want to actually self-direct or into your wallet in the control option. So you'll set that up, which is your investment structure, and then you'll be popped out into your new Superhero Super account. If you're waiting for a rollover, that might take a little while just to be, to get from your old fund, but you'll be able to see your account, and we'll let you know as soon as you do receive a rollover. The last step is to let your new employer know that you've changed funds, and from your profile you can actually download a form that's already been populated for you and just send that across to your employer, which will let them know where to direct your contributions. So that's all the content for today. Let me have a look if we've got any questions, and feel free to keep those questions coming into the Q&A. And then we will go from there. Mark, thank you for your question. So Mark, you said you're using Superhero Super. How do you access your super when required? Mark, I'm going to get our team to reply to you directly on that one, as it's quite a specific one. We do have a range of new features coming to Superhero Super, which might be able to help you as well. But yeah, we'll get the team to respond very directly on your question there, and how you would access your super. Don't have any other questions coming through. Oh, there you go, Tim. How easy is it to switch between autopilot and control? Yep, so Tim, it's pretty simple. You would just need to contact our customer service team. The reason, I guess, why you do that is with the control option, if you wanted to go back to autopilot, you're actually holding direct investment. So you just need to sell those investment options before we can, I guess, put you back into autopilot. But the team can help you to do that. But yes, it's definitely possible to switch between autopilot and go to control, or control back to autopilot as well. Question from KJ, how safe is it to invest in ETFs considering the market situation has been so bad? KJ, whether you choose to invest in ETFs or shares or managed funds, it really depends on not whether it's an ETF or not, I guess, but what the actual underlying investments are. So like we went through comparing high growth, and balanced, those all have different allocations to growth versus income or defensive assets, if you like. And whether it's an ETF or a managed fund, it really depends on the underlying structure of that investment, the percentage of growth versus income and defensive options, and yeah, what your preference is there. A question on insurance options. Are there insurance options? Yes, there are. Sorry, I didn't mention that one. So at the moment, we've got life and TPD, or total permanent disability insurance, available in Superhero Super. We are aware that income protection is also desired, and that is something that we've definitely got on the list to add in. But for the moment, it's life and total permanent disability insurance. So you can hold income protection insurance with another provider. You don't have to hold that with your super fund. So if you had Superhero Super and wanted income protection insurance today, you just need to go and get that insurance with someone else. But yeah, it is on the roadmap in order to add that into Superhero Super. Question from Daniel, why does the trading platform in Superhero allow a lot more smaller companies from the ASX as opposed to the super platform? Yeah, so Daniel, this one is mostly about risk. So with superannuation, you're dealing with your life savings. So why we've done that, you can go and actually look on the available product list on our support page, or you can contact us on live chat and we'll send you the direct link. But essentially, we have a different limit for every stock that's in super that you can invest a percentage of your super in. So, for some shares that are on that super platform, you can only invest 10% of your balance into one stock. And then other stocks, you can invest 20% in that stock. And that's to do with risk. And so that's why we limit the investment options in superannuation, because you're dealing with your life savings. And we, I guess, want to protect people from going and investing their entire life savings into a small cap that then might not survive. So again, we want to give people control and transparency, but we also don't want to open up people to unnecessary risk as well. Hope that answers your question. All right. I think we might leave it there unless there's any other questions. I'll give it one more minute. Otherwise, you can always contact our team. They're available on live chat. If you go to superhero.com.au, they're always available there, or you can email us at hello@superhero.com.au and we'll get back to your question. Alrighty. Thank you very much, everyone, for joining. I hope you got a bit more insight into Superhero Super. And again, if you've got any more questions, feel free to contact us. Otherwise, enjoy the rest of your day.